Underlying fundamentals, what I'm seeing in terms of manufacturing and in terms of corporate earnings, what corporate America is telling us, it feels like they are justifying this rise, that this is not just a rise in hopium, if you will, but there's some legitimate reasons to be optimistic based on the underlying trends. You don't see that, though.
No, I mean, there is reason to be optimistic, but the problem that I've had in this market is this market has been driven by 5 stocks. Not to say that other stocks haven't performed, but 50% of the gain for 5 stocks. My issue with this market has always been that it's in a very narrow range. The fundamentals are much better. They're much better than they've been in quite a while, but there does come a point where there needs to be more, the breadth of this market needs to spread out, or it's not going to
If that breadth spreads out, though, if the smart folks who are holding those 5 names that you talk about decide, okay, now's the time to start taking profits, and that money does not go to the sideline but finds itself in Avery Dennison, Union Pacific, just names that aren't necessarily associated with gee whiz, but companies that have been around for over 100 years and are good economic proxies. Would you be okay with the rally then?
I would, and that would change things, but I don't think it's going to happen. I think that's a false expectation. I think investors have grown addicted to these 5 great names. They've become addicted to them, and as they go, so the market goes. And I honestly don't think, and even some of these CEOs do not feel that their valuations are justified. They know that they're in the middle of a momentum rally. They know they are delivering on a lot of what they've promised. But in terms of can it sustain itself? Only if this market spreads out. If it doesn't, I think we're going to have a pullback. It might not be a dramatic pullback because I do believe small businesses are in better shape, but there's going to be a pullback nonetheless. And we can't expect, after 9 years of this market rally, for it to last forever.
Pullbacks obviously happen, and corrections obviously happen, and some would argue they're overdue just because it's been a long period of time. As an investor watching this, so someone with a money in a 401k, though, knowing that perhaps it's quote-unquote due, what's the action they take? I mean, because having someone probably try to guess the top has been a terrible, terrible thing for people. Since going back to 2009, we've had a lot of people. I had a lot of investors who didn't get back into the market, waiting for the next shoe to drop. And since then, even those who stayed in have gotten out thinking, guessing that this was the
right. And the biggest problem investors have, all the investors I talk to on a daily basis say the same thing. Their allocations in equities, because bonds aren't available, yields are terrible. People don't want to be in the bond market. Their allocations are so high. You have a lot of people that are all in. So the only thing they could do is they could come out of the market and sit in cash. And cash, people hate cash, and they don't want to sit in cash. They would rather be allocated, but the risk of volatility is going to be much more extreme for those people.
Yeah, I mean.